So what we got today is commercial versus residential. I'm sure there's lots of investors out there, some on your books as well, going, what should I do now? Should I buy a commercial property? Should I stick to residential?
Both are really good. I think people really need to understand both. I think it's important for people to set themselves up with some residential properties first before they get into commercial.
And what about like market trends and cycles? Does that seem to affect commercial more than residential?
From a growth perspective, no, not really.
And I suppose location is still important when you're buying commercial property too, isn't it?
Yeah, it's very important. It's very important to look at location, whatever type of property you're buying.
And is Perth one of those markets that seems to be dictated by the mining?
To an extent, yeah, it's a little bit reliable on the resources, but again, you can make very good money.
So if I'm living in Sydney, where should I go?
What is your budget and what are you trying to achieve?
3 takeaways for our listeners out there at the moment listening. Commercial versus residential. What are the 3 points we should tell them to look at?
Well,
good morning, Lloyd, and welcome back to the studio.
hi, Mando, how you going?
Yeah, very well. Got a great podcast today.
Looking forward to it.
Yeah, let's get into it. So what we got today is commercial versus residential. I'm sure there's lots of investors out there, some on your books as well, going, what should I do now? Should I buy a commercial property? Should I stick to residential?
Absolutely.
So let's get into it. So it's a strategy and mindset. So is there a benefit to leading into commercial?
Look, both are different strategies. Both are really good. For me, I think people really need to understand both, and the risks and how commercial is obviously different to residential. I guess essentially, I think it's important for people to set themselves up with some residential properties first before they get into commercial. Now, a lot of commercial, property people may not necessarily agree with that, but I do feel that in terms of, long-term capital growth and stability, the way you can leverage off it, probably getting into, a residential that has less risk, low vacancy rates, good solid tenants, is probably a good start. You'll get good growth, in a residential property in a good location because people always need somewhere to live. The data shows that history of growth in good residential properties are there, and I think generally people feel a little bit more secure with that to start with, prior to getting to a commercial property that does have maybe a few other perceived risks.
Yeah, so there is some complications there with commercial, isn't there? And lending can be one of them as well.
Yeah, absolutely. Yeah. So with lending, generally the banks will lend you a little bit less. So often it might only be 70%. So you need to come up with a larger deposit. So a 30% deposit, whereas most residential properties will be 20% deposit, often 10% deposit. So it is a little bit more affordable to get into a residential property to start with. The other thing also is that commercial properties, I guess the benefit for them is that you can have tenants on a longer lease. Mm-hmm. So generally they'll sign for 3 years or 5 years, for commercial assets there. So you do have that peace of mind of a longer term tenant there. If that tenant, because they are businesses, if they do move out, there can be a longer period of vacancy.
We've experienced that.
Find someone else there, which is a little bit more complicated than a residential property, where essentially if a family moves out, you should be able to get another tenant in relatively easily in a residential property.
Yeah, and I've seen it myself with commercial properties. They have great yield. They're paying the outgoings, being council rates, water rates. Some of them are paying land tax on there. But when that property comes empty, it might sit empty for 6 months. So I suppose as an investor, you've got to say to yourself, can I afford to have my investment property empty for 6 months?
That's exactly right. And that's one of the reasons that I do suggest that people should get into residential first. So they've got a bit of stability there, a bit of cash flow coming in, and then they can take on the risk of commercial. Yeah. Because if you do have any vacancy there for a sustained period of time, it's going to cost you a little bit more because you potentially got a higher mortgage, but you've also, you're paying the outgoings on the property, more so than what you're doing on residential properties. So I think that, probably getting to that as a novice investor first off is probably not necessarily the most comfortable thing for most people.
And what about like market trends and cycles? Does that seem to affect commercial more than residential?
From a growth perspective, no, not really, because with commercial, it's more than anything. It's really about a good, stable, long-term tenant and the yields there. So you'll get capital growth there, but it's generally not going to be as high as what they would be in a good residential property most of the time. So we don't generally talk about the trends of each particular market as much as what people talk about in residential properties essentially.
And I suppose location is still important when you're buying commercial property too, isn't it? We've spoken in the past about buying in mining towns and things like that, because I'm sure if you went into some of those towns, those commercial properties would have huge returns at the moment. So is it still important to look what else is around your commercial property and what type of tenant would be coming to your commercial property?
Yeah, it's very important. It's very important to look at location, whatever type of property you're buying, because like as you said, if you're in a location that's it's a really busy road or it's very industrial, may not suit the type of tenant you might want in there. You need to look at what you're getting. An example of some of the risk is, say, COVID, a few years ago, where a lot of the commercial properties became vacant because everyone was working from home. A lot of businesses either went out of business or they had to stop trading for a while, things like that. So a bit of a risk there, but there were certain businesses that continued to operate, and even if people couldn't go in and see them, like for example, like a dentist or a doctor, a lot of those still had online work and things like that. So if you've got that type of tenant in your property, it's probably going to have less risk and be more secure than maybe buying a commercial space that might have a cafe or something, because your cafes and restaurants are maybe ones that will be a little bit more at risk of moving out or going under.
Yeah, and just back to the lending side, I had a similar scenario where we had a commercial property, the bank were restructuring what they're doing, and they then changed their loan structure because we didn't have a 25-year loan. I think we had a 3-year loan. Came to the end of 3 years, and they said to us, well, we don't lend 70% anymore. We only lend 60%. And so then they were asking for us to come up with another $120,000 within 4 weeks to add into that loan. Have you seen this as well in some of the commercial dealings?
Yeah, I have seen that a little bit. But I think that when that happens, you really need to get some advice, either from, probably from a good commercial financial broker, maybe from a commercial buyer's agent who can assist as well, because, that shouldn't be the normal. So if you do have issues like that, then, people can, look around and get a little bit more advice on that, because I think for me, it's not about telling people they shouldn't be buying commercial, because I think commercial is a really good thing. But buying it as first off may not be the right option for them. But I definitely think that people need to get that right sort of advice there.
Yeah, absolutely. And what about like tenant management? Back to that again, tenant management, finding that right tenant to move in there. Is that more important with commercial property than residential?
Well, I think the main thing with commercial is that when a tenant moves in there, they're going to be setting things up the way they want. So if it's a doctor's surgery or whatever, they're going to have a certain fit out there. If they move out, then you've either got to get another doctor to move in there, or another tenant's going to completely outfit this for something else. There's a little bit more risk there. So you really need to look at the location of the property and what's best suited there, as a tenant. So if it is a cafe, for example, then it can be quite easy to get another cafe to move in there, another cafe owner to move in there if there's demand for cafe.
Yeah, because the commercial tenants will actually fit out the property as well. Yeah, and change the use, do a DA to council. So you got to make sure whatever they're doing in your shop is sellable to the next tenant.
Yeah, no, 100%, absolutely right. But I think to some extent, like if you're looking for commercial property, try to really de-risk that. Like if you buy a property that houses a post office, then the chances are the post office will never move. Just as one example off the top of my head. So you're really looking for the right sort of tenant that you think will be long term. And it does come back to, like, if you do buy a coffee shop or a restaurant or a clothes shop, there's a chance that they'll move at some point. Now, a clothes shop can always be replaced by another clothes shop, but again, that's a bit of a volatile industry.
Yeah, two high risk industries.
So you need to really sort of think about that, and that comes down to before you buy the property. You don't buy the property and then think, okay, I wonder who's going to be my tenant. You really need to buy that, think about that beforehand. But probably more likely is you buy the property with the tenant in place. And then obviously look at the history of the tenant, how long they've been there for, what sort of, is that been the same industry that's always been in that building, and do all that due diligence beforehand.
Maybe look at their lease as well, see what sort of terms are on their lease and when they're due for option to renews and things like that.
Yeah.
We do see a lot of those. And what about future outlook for commercial versus residential? Do you think one's going to outperform the other?
Look, I'm always pretty confident that buying a residential in the right area, is going to perform really well. You're always going to get higher yields from commercial, but I do think that you're going to get really solid yields. Really solid growth from the residential properties. If you're buying in the right area where there's demand, there's always going to be demand for people to live. If you're buying commercial property, depending on the type of property you got there and who's the tenant, it's probably a little bit more volatile. You buy a good residential property in a good location, there's always going to be demand for people to live there if it's near the city or it's near the water, things like that. So there's always going to be that solid growth. And we've seen that in different markets. We've talked about some of the really high growth markets and what they're doing and everything like that. So I do think that you need to have a good established asset base of residential properties within your portfolio. Don't risk that and just have commercial properties. Just like I tell people not to have a whole heap of only duplexes in their portfolio. They should have just some good solid investments in there as well.
I think people who have residential property end up going, I'm sick of dealing with the tenants and I want commercial and there's no more headaches. But I don't realise, I think when it's empty, it can be empty for a long time and that's when your headaches come in as well. So,
yeah, that's right. And I think there's probably less headaches from a commercial tenant.
Yes.
But what people need to realise is that shouldn't be too many headaches from residential tenants, because if you're buying in the right area, an area that has sort of a high proportion of owner-occupied type people, so people who rent in that area are wanting to live in a good area, and you get a good property manager. So every now and again you might get a tenant that's giving you a few headaches, but overall you should really have a tenant that's not giving you too much grief and a property manager that's taking care of that. So because a lot of people have sort of horror stories about tenants and what's going on in their properties and stuff. But I do think that's sort of part of the process initially is to try to get a good property manager there and iron that
I think you
out.
touched on a good point too. If you've looked at that area and there's a lot of home ownership in that area, your turnover rate for tenants is a lot less because it's harder to get in. So you generally find your tenants will stay longer. And I've experienced that working in the industry all this time, that you have your homes that are in areas that a lot of people want to live in. They don't turn over that much, even as a rental. They don't come on the market as much as often.
Absolutely. And I try to look at sort of 70 to 75% ratio of owner occupiers to renters. You don't want to buy in an area that has like 60% renters because there's going to be a high turnover. Generally,
there's competition for your own rental property.
Yeah, that's right. Yeah. So, you want to buy in those really good areas. So, again, location comes down to it. Of course, that might come at a bit of a cost. You've got to pay a little bit more. But again, that can also be, okay, should you be buying in a capital city or should you buy in a regional market? Because you can buy really good, well-located property in a regional market that'll be cheaper, but really well-located, as opposed to maybe buying a really bad suburb in a capital city just for the sake of being in the capital city. So you can really sort of...
All right, so 3 takeaways for our listeners out there at the moment listening. Commercial versus residential. What are the 3 points we should tell them to look at?
Well, I think really the first thing you really need to look at is the tenant that you're going to have in commercial there, and the type of asset that you're buying. So the type of tenant essentially that you're going to have there to see if there's going to be any long term.
Are they a long term tenant? Are they easy tenant to find?
Essentially easy tenant to find. Then look at the data in terms of the growth of that commercial property versus the residential asset to see which stacks up the better, and of course the rental yield as well combined with the growth. So you need to weigh up both, and of course the third point would be leveraging them, financing them.
Financing them. I think that's the big thing with commercial.
So a big thing there because the banks will lend you a little bit less, so you might need to be a little bit more cashed up. So again, maybe that's a good idea to have a few residential properties first to get a little bit more cashed up before you get into.
Because I think they charge you a higher rate too when you're looking at commercial loan.
They do.
Yeah. All right, Lloyd. Great points there.
Is that so? That's only about halfway.
I know. So what else you want to put in there?
Well, we need to. Can we combine? What's the next topic?
Yeah.
We don't have to do a fourth. We could just do the next.
Cities to buy outside Sydney.
Why don't we just talk a bit about that now? And
add it to it.
That'll just be 3 podcasts then.
Yeah.
Yeah.
Because how much time have we been on this podcast?
Like 10 minutes.
That's what I thought. Yeah.
I think we can do. We can just talk a little bit about what the market's doing, where to buy outside of Sydney.
Okay.
Yeah.
All right. So, Lloyd, if we're looking at residential, and maybe we should be looking at a residential, not so much commercial as it is our first investor, do you think maybe people should then start looking outside Sydney for something they can afford?
Look, absolutely. I mean, Sydney is the most expensive market in the country, and really, you don't get yourself anything much at all for sort of under $1 million in most areas these days.
Yeah. So if I'm living in Sydney, where should I go?
In terms to buy, or
to buy. Yeah.
Okay, so I think that the first thing, rather than just where should you go, that's more like that's like a conversation that you'd have a Sunday afternoon barbecue. Like you say someone, oh, where should I buy? Someone will say, oh, I think you should buy Perth, and someone else will say you should go buy Darwin. But look at your strategy. So what is your budget and what are you trying to achieve? Because for some people, they still want neutral or positive cash flow, which means buying in Sydney is sort of out of the question.
Correct. Yeah.
Anyway.
Yeah. It's normally negative geared.
And then other people are still wanting good solid growth, but can't really afford Sydney, or they can only afford a 1-bedroom unit in Sydney, which isn't going to really get them that growth. So I think you're looking at strategy, understanding what you want, and then looking at the right markets that'll help achieve that. Now, I think looking at the southeast Queensland markets, with the population growth that's there, with the shortage of housing, I think that there's a lot of areas across the Brisbane market. If you're not buying in Brisbane, there are regional areas. There's areas around the Gold Coast. There's areas, even out of Toowoomba, which is a major city west of Brisbane. That's quite a good story now because it's now got its own the Wellcamp Airport, so you can actually fly from Sydney to Toowoomba now. I remember I used to have to fly to Brisbane and then grab a car and then drive out to Toowoomba. But now that you can fly to Toowoomba, you've actually got it's more accessible. So that's actually pushing the economy and the growth there. So that's an example of more affordability, slightly better yields.
And do you think people now are looking at lifestyle too when they're getting out of Sydney?
Yeah, absolutely. I mean, it's always been a case. I mean, if you're looking for a home, essentially, I mean, people have been moving out to areas like the Central Coast and the Hunter region for quite some time because. It was a relatively easy commute. You moved to Central Coast, it was cheaper. You could then sort of drive down the M1, get to Sydney, get to work. But since COVID and as everyone tends to work from home, then it's even easier now because people can move out there and still work from their companies.
So do you think as an investor you should be looking at that as well to say, well, where is the better lifestyle? Because I think that's going to eventually flow on to more money.
Yeah, potentially. So definitely it's got that lifestyle there. But I guess my point around that also is that if people are moving there and that's actually pushing the growth, then you should be then potentially looking at some of those markets because as an investor you want to be going where that growth is. So there's been some very good value, some very good growth occurring in markets such as the Central Coast, the Newcastle market, the Wollongong markets in recent years. Again, the yields are not particularly strong, so it comes down to strategy. If you want a higher yield, you might go to something that's a little bit more more on the regional side as well. You can go. I mean, Orange, for example, is a place that's been a really good story over the last 25 years, with really solid growth. That's about 3.5 hours, west of Sydney. So again, good solid growth, and while the yields are not that high there, certainly a different sort of story to buy in Sydney. So there's just a lot of options for people to think about, rather than just sort of buying sort of close to where they where they live. But
do you think they're going to be market trends and they're going to phase off, or do you think they will continue to show good positive growth?
Yeah, so that's where you need to look at the data. So when I said Orange has been a good story for the last 25 years.
Yeah, there's Orange, Central Coast. Yeah,
you can look at the data there, and Orange has been pretty consistent for ever since the year 2000. So you don't really want to go to someone that's just shown you sort of 1 year of growth.
Right.
You need to have something that's a little bit more tried and tested than that. So there will be some markets that have had just a very short spike of growth. So you need that longer term. So look at that data. Run some numbers there on RP data or Price Finder, any of those.
And we're looking over probably 10 years or 15 years or as long as you can get?
I would probably look at sort of between 20 to 30 years,
right?
To see what the market's been doing at that time. That doesn't necessarily mean, that properties that have had sort of less growth or growth in a shorter period of time aren't good as well. But it's just good to give you an idea over the long period of time. And then you can do a deeper dive into what infrastructure is currently going in. So if you're looking at a market that hasn't done a lot and Queensland's an example where not much happened after the GFC, and then they had the 2011 floods, and it just kept putting a dampener on there. But we've seen in recent years, the shortage of housing, the population growth, new infrastructure that's been built, has done really well there. So looking at that and what's going into the market is really important. Like if there's new universities, if there's new hospitals there, there's drivers for the economy that are actually bringing people to town, then that is something to...
And that's what we want, isn't it? When you touched on bringing people into town, what's bringing them into town?
That's exactly right. But I think what's really important is I never really look at hotspots. So I'm not one of these people that will sort of look at where's the next hotspot. We should buy there because it's going to get growth in the next 6 months. Because while we do try to buy where we are in an upward cycle, and if we do get growth in the next 6 or 12 months after we buy property, that's great. But we want to look at those long-term trends. So I'd rather buy into a market that has previously had growth. We don't want to buy into the wrong part of the cycle. We don't want to buy when the market's sort of declining. But we also don't want to buy into a market that has never had growth, so we don't have anything to go on.
Yeah, there's no data.
Therefore, it's just a little bit more like crystal ball-like. So it's a gamble, that's right. And we need to be careful of that as well.
Very, very good points, very good points. So your pick, if you're looking outside Sydney, where would you look?
Outside of Sydney, well, there's a lot of options.
We might drift off to Queensland too and give us your pick there and Melbourne and Victoria.
Well, see, I think a good story that's close to Melbourne. It's only about 73 k's from Melbourne. Is the Geelong market. That's got plenty of opportunity there. The yields are not great there, as aren't anywhere in Victoria, but certainly the price points are still good there, and much more affordable than most areas of Melbourne, particularly that you can get sort of good standalone houses in Melbourne. In Geelong. There's definitely some good options in southeast Queensland. I mean, Rockhampton is probably an option that I know people can consider. Particularly, it's got good solid yields there. It's showing good growth, and there is. So the Olympics are actually coming to Rockhampton, which is giving a little bit of a spike there. Yeah. Of course, it's a crocodile-infested river. So
they'll row faster.
So they'll row faster or something. So there's a little bit of arguments around that at the moment. However,
I saw that in the news.
There is some good things happening there, and it is also a market where you can buy properties for around 500,000 and have a good yield. Yeah. So definitely worth considering. And like I said, there's plenty of opportunities around New South Wales. I feel that probably the Western Australian market is probably had its run for the time being. It's still very solid, and there's still very good price points in Perth in terms of they're still increasing. There's some really good things happening there, but it's just hard to know whether it's come to the end of that cycle and it's going to start declining soon. So I think people buying in Perth probably best to have bought there sort of a year or two ago. Getting there now might be starting to get a little bit late.
And is Perth one of those markets that seems to be dictated by the mining?
To an extent, yeah. It's a little bit reliable on the resources, but again, you can make very good money there if you're just getting in at the right time, and you're not trying to sell at the wrong time. But it is something that you need to be a little bit aware of. It is a market that I know in the last decade, from 2010 to 2020, had negative 13% growth, whereas the eastern suburb major cities had positive, more than 40% growth. So you do need to be a little bit aware of that. Another market is Darwin, which has very high yields. You can get properties for 8% yield in Darwin. But for me, long-term growth might be a little bit questionable there. But again, just do your homework. Do your homework, and speak to some local experts who might be buying in that market if you're wanting to buy there. Just sort of understand the market you're getting into, because I'm not saying that any of those markets are the wrong markets to buy in, but you need to know why you're buying there, when you should be buying there, and what type of property you should be buying there.
All right. Good advice there again today. It's that time of our podcast. We've got Ed's deal coming up, so I've got 3 properties to put to you, and you're going to tell us if they're a good deal or bad deal. Are you ready?
Always ready.
Now, you haven't seen these. For all our listeners out there, Lloyd hasn't seen them, so what he says is actually straight off, which is great. So the first one I'm going to start with is 378 Beach Road, Baint Haven.
Yep.
All right. It's actually a block of units.
Yep.
So it's up there for $2.5 million. It is rented. The yield on, I think, that is $109,000 a year at the moment, just with normal residential. It's not rented out for Airbnb or anything like that. What were your thoughts on that one?
Well, potentially, this sort of thing's particularly good. Without having read all the ad, does it, would you know if they're on one line or strata titled?
They're on one line at the moment. Yeah.
So I would look at that and see if we can subdivide it, and then be able to have, potentially sell half the units separately.
Mm-hmm.
But I'd do the numbers and see if I bought the whole lot and then sold them separately, what each unit would be worth separately, and strata title them, and see if we could strata title them, because that would be a lot of research in itself. We need to check with council and everything to see if it's got fire rating walls, and if they're separately metered sufficiently enough to be able to subdivide them and stuff. However, potentially that's
Great location.
It's a good location. I like the suburb.
Yeah.
And that is a good strategy. Now, it's listed for $2.5 million, so that's not everybody's budget. But it's definitely something that would consider. So that is a maybe. That's for me is something that I'd look at to see if we can do further due diligence.
I'd look at that before I bought a commercial property.
Yeah, there you go.
Do you know what I mean? That's what I'd look at. I think there's a lot of opportunity there, a lot of value adding that you can do with it.
And that's about it's value added. Basically, if we can strata title them, maybe renovate the units as well. There might be a lot of value add there.
Yeah, I thought it's good too. If you got one unit empty, you can renovate that unit, but your other units are still rented, so it's not affecting your cash flow as much either.
And if you own them all, then you're the strata body, so you don't need to you just need to ask yourself for permission.
That's correct. That's right. All right, so we're going to drive back up the highway now, back into Double Bay. So I've got one at 19/528 New Southhead Road, Double Bay. It's a 1-bedroom apartment, 1 garage, no parking. It's an Art Deco style. Rental return is $690 per week, and the yield is 4.6%. Asking price $775 to $820. So you can get a property in Double Bay for under $1 million.
Yeah, that's it's not a very nice road though, is it?
No.
Look, there's a few things about that. The Art Deco style is the sort of style that I would look for. Yeah, if I was going to buy.
They're more of a solid build, yeah.
It's a solid build. It's an older build, and the price point is quite attractive. Does it say? I can't see how large the apartment is.
It's a 1-bedroom. I don't think it's going to be large. I reckon it's going to be around 60 squares.
Oh,
you're worried if it's under 40 and you can't get a loan on it?
Yeah, well, I think anything under 45, most banks won't lend to you.
Just check on the back of that and see if it's got a...
the yield seems quite attractive, so I'd potentially consider that, but it's a maybe. It's a maybe. It's obviously buying on a busy road.
Yeah.
But again...
I'm surprised you're saying maybe. What do you like about it?
Well... It's Art Deco. It's in a good suburb, and potentially, if I was going to normally I wouldn't buy 1 bed, but that price point is fairly attractive. But I need to do a lot further research to see how large the property actually is, you're buying into a suburb that's
it's established.
It's an established suburb.
Yeah,
it's a very expensive suburb. So, but the drawback is obviously the road that it's on and things like that. But it's a possibility.
It's an interesting one, isn't it? Very interesting. All right, last one we got here. It is 80 Rogers Street, Roselands. It's a duplex, 5 bedrooms, 2 bathrooms, 3 parking. It's on for sale, 1.690. Probably rent for about $1,100 a week, that property. So that would give you a yield of around 3.5% to 4%.
So that's just one side of the duplex.
One side of the duplex.
Yeah, I'd say no to that. That's probably a nice home for someone to live in.
Yeah.
But that's quite expensive. 1.6 to buy half a duplex.
Yeah.
For that budget, you could go into a regional market and build a whole duplex and subdivide them and make some money. So for me, and obviously buying something that with that sort of yield would be a no, and it probably have limited growth compared to in that area. You probably want to be buying a house anyway.
Yeah. Reading your book, I go, where's my value adding? That place is pretty much brand new. There's nothing I can really do to add some value to it either.
It's good for a family to live in.
Yeah, that's what I think.
If you want to live in that area and you can't afford a house, then that'll be all right to live in. But that would be a no otherwise. That's
a no. All right, so we've driven up and down the coast of Sydney, and we've come back with a maybe in Double Bay and a possibly yes down the south coast.
Yeah, absolutely, and a no in Roselands.
And no in Roselands. All right, Lloyd, thank you for coming on again today.
Anytime.
It's been a pleasure.
Yeah, absolutely. See you next time.